So hi guys, so do you know that by refinancing your loan from 3.69% to now 1.69%, you save up to 1k per month, and but per year is actually about 12k. So imagine that your round trip, air ticket and all. Does it sound a good deal to you? So right now, here's a $1,000,000 question. Does lower interest rate means that property prices are going to go up? Does it mean that the market is going to be unstable? Let's break it down further. So hi guys, my name is Justin.
And I'm Martin, and today we are going to talk about one of the hottest topic in Singapore property market right now, which is the relationship between interest rate and property prices in 2025. Okay, so over the past few years, we have seen massive changes. Just in 2022 and 2023, there was a very huge interest rate spike. And this actually sort of flattened out in 2024. And now in 2025, you can see that actually the rates are starting to ease again. And actually, the US side is actually going to drop the interest rate even more, right? So what does this mean for you, whether you're a homeowner, an investor, or upgrader? That's exactly what we are going to share today.
Okay, so but before we go on, if you like this kind of content about property and some insights, please do us a favor, kindly like, share, or subscribe, or share with us what kind of content is of your interest to help us push it out more to you. So basically, the first thing we look to is like, why is the interest rate easing up? Like why the interest rate are going down? So basically, a big part of our interest rate, how it works right in the market, comes from the US. So for our home loan here, we usually backed by SORA. SORA is where your overnight rates are, and it tends to follow by US Federal Reserve decision. So the Fed recently has started cutting down their rates in 2024. For them, they are trying to cool down inflation on their end. And when that happened, right, it flows into Singapore as well. So in 2025, when the Fed started to hit the pause button, Singapore was a bit affected. And on local side, MAS actually took the step earlier this year to try to soften the blow. So when that happens, right, it actually indirectly reduces the borrowing cost in Singapore, and that brings down our home loan rate right now to be sitting about 1.69%, which is actually a good deal because compared to past 2 or 3 years ago, we almost hit about up to 4%.
Yeah, so talking about that, actually in 2023 when the rates was very high, a lot of homeowners were affected. They see their mortgage increasing very, very much higher than what they were expected to pay as compared to COVID times when interest rate was very low. Yeah, so actually what does this mean for you? We can say that actually if you have a $1 million loan at 3.69%, you're paying about 4,500 plus of mortgage. And if let's say you were to refinance today to drop it to 1.69%, suddenly that becomes about 3,500, saving you about $1,000 per month. Yeah, so over a year that's going to be about $12,000, and over 10 years that's quite a lot of money, don't you think? Yeah, and you know that is really like what Justin said. You can actually bring your family on a trip, or you can even cover your car loan installment partially as well. So these lower rates really put the money back into people's pocket, right?
Now guys, and 12k per month for your own mental health. You want to buy a handbag to your wife also can. You need to make sure that you don't sleep on the sofa. So when you put that into perspective, right, who benefited the most out of all this? Actually, if you look into it, if you are price sensitive for first-time homeowner, you're looking to get a market, also get a property of your own, and you're worried about your monthly mortgage and all, this could be a good time for you because it means that your borrowing, right, will be lesser as well because lesser interest to pay off. Then, or maybe for HDB upgraders, when you want to change from HDB houses, when you upgrade to bigger houses and all, this might be a push factor that will help you with a lesser loan. And last but not least, investors. If you are going for it, same reason as well. 3-4% to go in for investment is actually quite high price because usually when we talk about investment, we go to private properties. Properties always most of a very high quantum. 3-4% of a high quantum is a bit of worry sign at times. But now with lesser, you are able to enter the market easier and still reap the reward in the future.
Correct. So I totally agree. I think especially for investor, because the monthly mortgage interest to the bank is a very important part of the cost, right? So whether the current renter can cover the mortgage and all the other MCST, property tax and stuff like that, interest really do play a very, very important role. Okay, so the next part I talk about is actually do lower rates really automatically push up the prices of property? Okay, so this is where it gets interesting. Lower rates make borrowing cheaper, okay, but they don't automatically make the property prices go up, right? So affordability is still a huge barrier. So now, if for example today, yes, even though interest rate might be low, but if let's say the property prices have went up so much higher than as compared to people's salary or their affordability, this might not push the property price up as what we think it is. But naturally, like what I said, interest rate low, people the buying intent is there. It will push up actually what people perceive of property, because it becomes cheaper to borrow and people will actually tend to want to go into property more. Like I said, for example, for a couple earning $18,000 a month and they are eyeing a $2.4 million condo, right? So their max loan is about 1.8 million, right? Even at 3% interest over 30 years, their repayment is about $7,589, and that's like putting down 600,000 in cash or CPF. So even with interest rate that is low, right, the financial burden is still quite high for the couple as well. Yeah, so I think that affordability still plays a part, but generally as interest rates come down, property prices will go up.
As an agent, I think what we're going to share about is that although it sounds good that it's a good deal, the interest rate is lower for it and we are pushing for you to enter, but actually what comes to play is that what is your financial capability and what's your financial comfort as well. But if your affordability and your income is unable to sustain, for us, I think Martin will agree as well that we generally want you to get something off within your range. Try not to overstretch yourself because there are still a lot of things for it else to go for. For example, like if you overstretch yourself, you can't even have a daily meal, can't have a proper meal, or can't have a proper outing with your family, and you're living with stress, all this, well, it's actually not very beneficial in the long run.
Yeah, and also to add on, the interest rate might be low now, but we never know what will happen in the future.
Correct.
Because the interest rate can, at the same time, come back up right again when, let's say, the US side decides to increase the rates again to curb inflation and stuff like that. So I think it is good that we actually do cater into some buffer.
Okay, so, and guys, don't forget Singapore has this very strict guardrails on terms of how much money can we borrow. So in Singapore, we have this thing called TDSR, which is long form called total debt servicing ratio. So it actually cap your borrowing power at 55% of your income. So what does this do is that the bank don't assess your loan at current market rate, but it assesses you through a stress test at 4%. So whether the market rate is about 2.5 or 1.69, 3.94, it doesn't matter because your loan eligibility doesn't change much due to the stress test.
Correct. So I think what our government has put in place is a lot of regulation that Justin has mentioned. So this helps to keep the property prices very, very sustainable. Right. So yes, prices are increasing, but it is increasing at a sustainable rate. Yeah, because of all these safeguard and guardrails in place to prevent people from over leveraging and borrowing too much. And then when interest rates start to turn around and go up, people start to be unable to pay off. So because of all these guardrails we have, it actually helps to safeguard people from over leveraging.
It actually prevents over speculating as well. Because when investors come in and over speculate, then the whole property pricing go very sky high. So we are still moving forward, but it's moving at a comfortable and slow pace, like what Martin mentioned earlier on.
Correct. So actually the surprising truth is that in fact history shows the opposite. Back in 2017 and 18, where interest rates were rising, property prices were climbing very, very high as well. And actually, why is it that way is because what drives the prices in Singapore isn't just interest rate, it's also the transaction volume. The more volume we have, the more you drive the price up. So when activity is high, there are more people coming in to buy, buyer sentiments are strong, it will still push the price up even if the interest rate is high. So when the volume starts to slow down, usually because of cooling measures or whatever, bad sentiments coming, price growth will actually start to flatten out. Yeah.
Correct. So remember, like 15 months cooling measure. Once when that happened, right, the market takes some time to recalibrate itself back to its normal terms. So when that happened, so what do we see for 2025? Is that rates are actually very supportive right now. Demand has also improved, but affordability, TDSR, oversupply, supply and demand factors also come to play. And when you put all these comes in, right, it actually balance out the market. So we are unlikely to see a runaway high growth like what I mentioned earlier. It won't be like post-COVID where suddenly the prices start to hit sky high or the 1.something million HDB flat and all. But we're also not expecting a market crash. Low interest rate doesn't mean that the market is going to crash anytime soon. So basically, because Singapore market is just too resistant and you have strong fundamentals to keep it in place.
Okay, so overall we like to end off by giving some advice for homeowners. I think now it is the best time to review your existing mortgage. So if you're out of your lock-in period and you're still on a high rate package from 2 years ago, refinancing could save you hundreds or even thousands per month, right? And if you are keen to look for a refinance, you can look for us. We can help you with the recommending a banker for you to refinance your package. If you are a buyer looking to buy your first property or investment property, the conditions for interest rate is much better than last year. And of course, you still have to be careful and plan long term and make sure that the affordability works out for the long term, not just for this period of low interest rate. And make sure that all this works out for your long term horizon. And if you like a personalized consultation, do feel free to contact us. And our details are in the description, the YouTube video. And of course, Justin, would like to end off?
Okay, so to wrap things up, so the main key thing is not only to plan smart, but also to do things smarter. So thanks for watching. If you have any question, feel free to reach out to us.
And once again, I'm Martin.
I'm Justin.
And we'll see you in the next one.